Good afternoon. This is a notes from a napkin video update, not the newsletter. It's for Thursday, October 2nd, 1:36 p.m. Eastern Time. Rich pause for critical point. Stock index magi and the notes from a napkin. All right, this is just basically going over some news, some things flying around my mind, my affiliates, but also things that are going into the modeling of what's really going on in the markets, the business cycle, the economy, people. All right, we're starting out with something from a philosopher that's kind of an obvious thing here. So that's for the social economy type society stuff that we're studying. All right, this one, see if I can zoom in on it. So this is warning that the recession risk is high and we can have a recession, but the model is still saying we're probably not going to have a true business cycle recession, especially the more important one that comes once a decade normally. We're probably not going to get that to 2027 on into 2031, somewhere during that time to start and finish it, okay? Um, but it is something to be concerned about that the day of reckoning is coming. This is on the electricity price, which you should realize by now Trump has lied about everything. He's really not accomplished much of anything other than firing people, destroying the government, racking up more debt, which I'm fine with saying it's not really debt. But the problem is it's money printing, but the problem is it's just going to the rich, big business, Wall Street, Banker Street, not really coming to the American people. So as far as I'm concerned, that's just as bad as if it was real debt. That's a problem for our country and our people. But this is the electricity rate, and it's going to get worse with all these data centers they're developing, the AI centers, okay? They're just burning way too much electricity, way inefficient. And the problem is the middle class and poor are paying for it. Those businesses should have to pay a higher electric rate to do those things. All right, again, a little more comments on just people and how they behave and work. All right, monthly global fatalities in armed conflict. Okay, so we definitely are killing one another around the world, but more in this country, and especially this country related to Trump stuff. All right, new home sales recently surged, but my guess is this is going to be what's called a level one top, either the last month, which I believe September, or we're going to learn it topped in October. So it'll be down November, December for some kind of fluctuation. I don't think it's really a start of a booming economy on the real estate side. There's other real estate charts that look ugly, in fact, but it did have a blip up there. Next, we have to wonder why is Trump giving government money, your and my money, to the head of Argentina. So you know it's all political and you know it's all corruption. All right, here is the Dems in the Farm Belt states. So the whole Trump stuff is hurting our farmers. There's farmers committing suicide. They're increasing the risk to our food supply of getting poor food, dangerous food, but less food and more expensive food. And then the soybean harvest, we have other charts that show China has basically come to zero buying. They should be buying our soybeans by aggressive manner from now well into next year. And they're holding out for the next crop out of Brazil, and they've bought most of Brazil. And the thing is, the rest of the world has apparently got enough supply. They didn't say, "Oh, China's beating us to Brazil's soybeans and Argentina's meal. I guess we better go to the U.S." They're not. They're not doing that. So we're really screwing up our global markets and our export business. This is U.S. government workforce fell 3.6%. No, it's not a surprise. Trump's firing people, and there's probably more to come, and it is going to hurt, the overall economy here. This chart is really about the velocity into money supply. The Federal Reserve started printing money earlier this year, maybe in April, maybe even earlier, and now is actually cutting interest rates. So they're helping on both sides of the equation. They're helping about all they're going to help, I suspect, what you would normally do. There's other methods of doing it. But right at the moment, the supply is kind of stalled here a little bit. We'll have to got more research to see whether that means anything or not. This is the gross domestic product, which, as far as I'm concerned, the trend is still down. It has not bottomed for the U.S. economy. There's other charts that do suggest it has. Now, this is also real gross domestic product, but it's not on a percentage basis. In my mind, it's what the economy's worth, okay? I also like to view that as per capita, by the way, and nominal GDP per capita, those kind of things. This is another chart of real gross domestic product, more on the percent basis. You can barely see it ticking up here. But right here, this is a kitchen business cycle and a more important cycle long term, and the most important once a decade cycle. Okay. That core line that normally goes with a recession, and we got the recession, of course. Then we got the big recovery out of that. We've come down, and this was just a minor long term kitchen business cycle. This is coming into a minor kitchen business cycle bottom for our economy anytime now into early next year. I'll even go as far as first half next year. So I do think it can be improving next year for the economy. But unfortunately, I also think we're going to see rising inflation next year and perhaps into 2027. And I don't know yet whether it's going to be surge, it's going to be huge, it's going to be terrible, or is it just going to be somewhat higher or somewhere in between. All I know is the direction and general timing of it. But I'm assuming that also implies higher interest rates. Now, I think the Federal Reserve will lower interest rates into early next year, and then they're going to be higher later in the year, whether they like it or not, because of the inflation. We may learn they can hold out longer than that. And we also may learn something may break the back of the economy and it just doesn't do well in 2026. But right at the moment, I'm assuming it can do better. But we're also going to see the inflation tick up. So really, the American people aren't going to benefit by a better economy. They're just going to give it away to businesses, to inflation. This is real gross domestic product. Zooming in on it, you can see a little bit of a tick up here. Due for that bottom, but no evidence. It's going to have to get way up into these levels here to really show that we have turned that kitchen business cycle up. The kitchen business cycle is a throttle up, throttle down process of the juggler business cycle. It lasts about a decade. In fact, it breaks into 7 to 12 years of economic boom and 1 to 3 years of economic bust. Okay. And it works. I've been using it since 2000, learned of it before then, but didn't really use it, but I've used it since. It's helped me immensely. All right, this is University of Michigan consumer sentiment ticked down yet again. We've also seen some other measurements I may show you on some other charts here that they're concerned amount of money they're going to make more than they're concerned of inflation, but they're also concerned of inflation. But in general, this is the lowest level all the way going back to 1950 or 1980, something like that. And we can see consumer sentiment did better in the 80s and 90s because they were optimistic the country was heading in the right direction under President Reagan, and then Bush, and then Clinton. And Clinton was really another Republican when it comes to the economy and business. And then the rest of things in life, he was more a Democrat. Then from 2000 to date, the consumer sentiment has come down. There's been some up moves when you can see for a portion of Obama, they liked Obama and felt better about the country. You can see a portion under Biden that they liked it and it got better. They didn't really care for the country under George W. There might have been a brief moment of picking up there. They didn't really care under President Trump, number 1 or 2. They've actually have turned pessimistic here on the future of the U.S. This is something that I've got to see if I can track down and read because I'm locked out of it because I don't subscribe to Bloomberg. But this we need to study this because if Trump's taking us into the Gilded Age, then he may also be taking us back into the mercantile age of 1700s back into the 1500s. 1700s, we were waking up, we had to tear it down, which is why we broke away, the U.S. that is, broke away from England, okay? Mercantile is a nice way to turn other countries into a slave for your countries. But unfortunately, inside your country, those people who can elevate themselves and kiss butt and be part of the game, okay, the monarchy, because it normally turns into a monarchy, they'll do quite well. But the rest of the country also becomes slaves, just like the rest of the countries become slaves. And normally what happens is mercantilism takes over the government, which is what we're doing now. And it just isn't a good way of doing it. It's good for the minority. It's not so good for the majority, and a portion of that time, it's not good at all. It's a disaster, and normally ends in a disaster. Or we don't wait for the disaster to have a revolution. Instead, we catch it sooner and say, okay, let's have a revolution. Now what we need is this chart is from SchillerData.com. It's the price earnings ratio, and we're up here at high levels when we're really too optimistic of the future of this country, the future of the economy, the future of stock market, when we're setting up for the next recession and next bear market. So the writing's on the wall. The day of reckoning is coming. We're doing the wrong things already within this longer term business cycle. But there's a good possibility the good times are going to stay in there to 2027, which is the earliest I'm now allowing under Trump, when if we had not had Trump, instead had Biden or Harris, I would have said 2028 is the earliest. And for everyone, I'm saying 2031 is the latest, but 2032 might have even come under Biden and Harris. The bottom, however, has been shoved back, meaning we have a crash, we have a recession, and the end of that recession now has been shoved back from 28 to 29 because of Trump. But I have not shoved the latest allowed of 2031. That's the same just as it would have been even under Biden or Harris. We may learn we have to also allow 32 for that. So we have this period of time that's rather wide when we're going to have peak economy, peak stock market, and therefore a bear market, the once a decade type bear market, down minus 35 to minus 60%, possibly minus 70 under Trump. All right, this is the S&P 500 calendar year bottom up earnings per share, and we can just see people getting way too optimistic, way too ahead, forecasting a great future. But it can last, it can work for a while, but someday they always do it. Somebody has to have too much optimism, and then everything caves in and crashes. All this is a warning. We're now starting to stretch the rubber band. We need to be concerned. Now, this one, on the other hand, is suggesting maybe we shouldn't be so concerned about all this. This is the earnings growth, which are very good, but not yet extreme. And I think John Authors put this out on his daily morning email from Bloomberg.com. All right, and it is something to consider in that direction. Now, this is the JP Morgan Global Manufacturing. Now, I believe today, tomorrow, next day, or something into next week, we'll get the services. We want to see the services. We want to see the combined when they use manufacturing and services. See how the economy is doing. This is a good gauge of where is GDP going. Okay, now for the world, it's above 50, so manufacturing is growing. Probably services are growing and maybe even better. But it did tick down in the last month here in September a little bit, but it's growing and doing okay. All right, now this is the U.S. version of that instead of the world. And what we have is we can see that tick down by September, but it's still above 50. So the economy is growing. It's not great, but it's growing. It's doing fairly good, actually. It's unlikely it's going to be up in the 60s the rest of this decade, because what happens with this type indicator, it gets crushed in a recession, and then we print the money, get right back to work, pull right out of that recession in a couple of years, but this indicator goes nuts, okay? And really, that's not the truth. In other words, this is not the top of the economy. It might be the fastest pace, but remember, all you're doing is getting caught back up. During this phase, this is the real net growth, and it's been declining into an inflation, higher interest rates. That was a kitchen business cycle, okay? Throttle up, throttle down. This was a kitchen business cycle along with that once a decade sell signal, the juggler business cycle and recession. What's debatable is was kitchen there or there, and it makes a difference in a sense. What is that? That can be a kitchen business cycle bottom, so we can be optimistic next year. The problem is it might not be that, and therefore it's still due, meaning something could go wrong now into next year, or it's just going to be a minor pullback, some stalling. It's going to take a while before it finally perks up, say, late next year on into 2027. For the moment, I'm assuming we're okay in 26, 27, but I'm looking for reasons where it won't be so good in 26 and then better in 27, okay? For our economy, that is. All right, now this is the Eurozone. We do want to keep an eye on those folks. And the Eurozone has made a great recovery out of recession territory. When it's below 50, we assume it's a recession, more likely 45 or lower, but it depends on the country, and then it depends what you're looking at within your country. But it's got back to its breaking even. The economy is really not growing. It's not falling back anymore, okay? So I'm kind of encouraged that this means it's going higher into 26, 27. Same time, I'm looking at this saying, we got to watch this very closely here. Keep thinking and dealing, because if this is not the kitchen business cycle top, then it's probably here and no later. We could have a bad time or just a not so good time next year. So there's things that can go wrong next year, but I'm still trying to be optimistic. This one I won't explain. It's just on the list here. We still got to study it ourselves here. What's going on with the job growth, which doesn't look very good under Trump right now in the U.S. But the U.S. is lowering interest rates in the free market system. The Fed Reserve's lowering interest rates probably into early next year. And then I think they're going to have to raise them. I think we can coast through this and things will get better, but I'm looking for reasons why the stock market is just way too optimistic for way too long here, and that the economy actually gives us some problems next year instead of having that growth that we very much like. Okay, here's the soybean sales to China. So it's just a horrible, horrible story for our farmers, and that's a significant portion of our economy as well. So it is a warning things can go wrong. This is a story of Goldman looks at how the economy is relying upon the rich continuing to spend money and how the rich are relying upon stocks to continue to rise in order they can be rich enough to spend more money. Our stock market's pretty much rigged by the rich, by Federal Reserve government, all under Trump, okay? And it's just when the Fed prints money, people say it goes in the stock market. Well, not really. It's an indirect thing. It really shouldn't be that way, but I'm suspicious some banks, ever since the 1980s with Greenspan, I think some banks spend more time and money on just trading currencies and commodities and bonds and maybe stocks and other types of things than they do in the sense of making loans. So it kind of hurts our banking, helping our middle class and poor. It's made banks more profitable by doing that trading, but it's also perhaps boosted the cost of living in this country and inflation and some of those commodities as well, unless you have replenishing supplies of commodities like the grains, okay? But anyway, I'm really, I understand that they own 80% of the stock market, so that's why they're getting so filthy rich. But the interesting thing is, I never really thought to now of the possibility that they buy and consume most of the stuff in the sky. I said, how can you do that? You can only buy food for yourself. But see, these rich hire a lot of people to run their mansions, to run their farms, to run their factory, this and that, and it can be included under their personal expenses and income. And then they buy a lot for their mansions. It's just unbelievable. And so they rely on the stock market, making more and more money to spend more and more money, and they want more and more money for safety reasons. And Wall Street keeps that money safe within the stock market and bond markets because it can't be insured by the federal government, this and that. So it's a real mess out there, a very one-sided, lopsided system, and this is a high risk factor right here for our future. This is someone just on how we study economics and debate economics, okay, what's good and not good. This is from J.P. Morgan. Incoming U.S. labor market signals for September are sending a worrying sign of intensifying weakness. The ADP report showed a 32,000 contraction in private payrolls in September, the worst this year. The contraction is all the more worrying because it was quite widespread. Now, some people say, yeah, but we're not only printing money, but now we're lowering interest rates. Well, yes, it may save us from ourselves. And that's why I can still try to be optimistic in 26, 27, but I'm wondering if the stock market won't wake up that it had been too optimistic this year and therefore can't pay more next year, even though the economy's growing. That there's just too big of a lagged lead there going on that needs to be adjusted. And then I'm also wondering, how about the things we just can't predict? What blows things up? What really breaks things down, okay? Okay, this chart is forward price per sales ratio. I think this is fairly important. The model's starting to pick up on it and move it back up the list a little bit and something else down the list. I like how this is split out of showing this the Mag 7, the S&P 500 without the Mag 7, okay, without those leading stocks. And all it's suggesting is, yes, it's very, very bullish, but it may be too bullish. It may be getting too out of hand here of what how the economy is really going to work. They're betting on almost too good of an economy right now. Fertility rates, this is something very long term. Climate change warned me decades ago that we were going to see fertility decline because climate does impact how we think and behave. You want to study Raymond Wheeler. He worked back in the 40s for the government, World War II, and then 60s, 70s for himself. And somebody wrote a book in the 80s. I have a copy of it, of saying how accurate it had been, 65 to 85% accurate. But from nobody's updated what he said from 80s to now, but it's looking like it was pretty darn accurate. And he was saying we're probably going to head to conservative Republican things of two extreme tyrants. I kind of used that a little bit with my own analysis to start forecasting 10 years ago that we would be back to the Hitler days by 2030. And here we are, a little more ahead of a schedule, a little bit different, I thought, but here we are. At any rate, this fertility rate is not just climate. It is the economy, the stress and tension on women, how we treat women. And you can just see around the world, some of them are revolting in a way of saying, I'm just going to have less children. I'm not going to have children for you if you're going to run this world that way. And we're seeing this in the U.S. And yes, this can hurt the economic growth in the future because in theory, the more people you have, the more money you can print. And this is why some people wanted the immigrants to come in to make even more people along with all our own pregnancies, okay? And especially do it if we're going to cut back on the pregnancies. But now we're throwing the immigrants out so we don't get a chance to, even if we couldn't educate them and make them valuable workers well enough that they're low-end pay workers. The point is their children normally advance very, very quickly compared to children born from parents who have been, their families have been in this country for a long time, especially white boys today that their families have been in the country for quite a while. They don't really want to work. They talk, they do. They talk the talk, but they can't really compete with women. They can't compete at college. They can't compete moving up the corporate ladder. And so they're out there now killing people and being Trumpsters and MAGAs. And this list just goes on and on. All these feedback loops and networking, it's just wild, okay? This fertility is part of that as well. All right, and by the way, what I was saying is you can print more money if you have more people. Now, you can also print more money the more intelligent and educated your people are, so long as they're more creative, productive. So you can print even more if they're creative, productive. So you can keep printing more and more and piling on as your people do more and more and better. But we're kind of burning out. We can't keep up with our own technology advancement and what's required in the jobs. God is not evolving our bodies fast enough, okay? So we have those issues where we're burning out as a people, and the rest of the world's more rested and doing it in a more proper manner of taking care of people and business. And that's why China's beating us. Asia's starting to beat us. We've got countries in Europe beating us because they take care of people and business. In this country, we only take care of business. We don't care our kids are getting killed in the streets. We don't care about this. We don't care about that. It's just business, make that paycheck, get some debt so you can go out and buy more and more and more. You're addicted to buying and you're never happy. You're just never happy. You're a drug addict, okay? And apparently a legal one and supposedly a justified okay one, and meaning you're better than the true drug addict, but in my opinion, you're just as bad. All right. So we should all buy less stuff, okay, and re-straighten, restructure here and rebalance. Okay, this is about Canada backing off, and I took a tour in late July of 4 states and recognized, yes, Canada is not showing up in those states, hurting the tourist industry, but also Americans were not going tourist locally. They're going abroad, not only to just have a vacation, get the heck away from the U.S. for a little while, but they're actually investigating in case they want to move. And I've helped people, I've just assisted very little, but I'm aware of several young people who have moved. One of them may be coming back briefly before moving, but in general, they're moving for at least 5 to 10 years. Some of them have permanently moved. And even those at 5 to 10 may say they're hoping they find it well enough and stay away. Many of those traveled to the state of Texas and reported back to me they were very disappointed in rural Texas. It's like a third world country. The more we look at these red states, the more we look at that they're just really poor, mismanaged, bad states. And the blue states need, if Trump's going to keep pushing the way he's doing, like he's trying to steal money from New York City now, okay, in New York State, and he's got a few other states he's picking up. If we have to go down this road, the blue states need to gang up on themselves, and they are starting to actually do this more on the vaccination stuff and other things. We need to gang up and say, we're not going to pay our federal taxes. You red states are on your own. And you know what's going to happen? Most of them are going to go bankrupt. That's what's going to happen. And then we'll have to bail them out and start a welfare program. But it's really been a welfare program all along for those red states. Come on. I don't care if you're Republican. I'm hurting your little feelings. It's your turn to be hurt, okay? You've gone this far and gone too far. You need to wake up. How's this really working? All right, and best I can tell, all this Republican stuff's going to do is continue to steal from the blue states to make the red states better. And the economy will still look good because it's just a multiple columns on an accounting sheet that in the end comes to a final result. but it's not going to make that much better. It's not going to be a great economy. You're just shifting it around to different peoples. The Republican stuff is nothing but a different form of welfare. Today, the Republican Party is really a communist party, but they're able to put it inside of capitalism business, unlike the old communists. They are a modern communist society. I want a modern socialist society, and I'm now a democratic socialist capitalist. And I put a plus beside that, and people ask me, what do you mean by plus? I recognize market economics can be separate from capitalism and is normally included in capitalism. But the point is, we can have a different type of capitalism or no capitalism at all, and it'll still work as long as we have market economy and we're printing money and pumping money into the private sector, and they go to work. It's the market economy that's more important than the capitalism. Okay? But in our society in the U.S., the two are combined. We simply just call it capitalism. And we don't realize the capitalists they are being overpaid. Investors are being overpaid. The stock market is too good. And I love the stock market. I make my money out of it. But it's just, we're being paid too much. That's all there is to it. All right, Magnificent Seven, we want to watch out. That's actually the old news, the other chart. Top ranked country of the year, as it was last year, is tiny Switzerland. Sweden comes second, America third. Okay. Inflation, yes, the Fed has backed off. Worrying about inflation, worried more about the economy just slipping, because the economy can slip even while we have higher inflation. Most of the time, we think if the economy is slipping, we have lower inflation and even deflation. When it turns into an actual recession, because most of our recessions are deflation. However, there's been a few recessions where actually inflation, such as in the 1970s. Anyway, this is turning up again, and we may see inflation explode next year and the following one. Finally, all this tariff stuff comes home to roost. It's been unbelievably delayed. And with the Republicans controlling the government business and Trumpsters, MAGAs controlling the government, I don't trust the government data. I wouldn't be surprised inflation's already higher than this, but it is something to watch and think about. Building permits, I forecast back in 23, 22, by 24, 25, maybe 26, we would see the real estate market cool down. And it is, okay? That part is working for me. All right, this is important news. The bottom 50% of U.S. households have historically had little stock exposure. The top 10% still own 85-90% of equity wealth today of the stock market. What's changed is that the bottom half now hold over $500 billion in equities, a 542% surge since 2020, fueled by stimulus, higher wages, and retail trading. It doesn't undo concentration, but it means more households are exposed. In a way, this is a good thing, but it's a bad thing in the sense that there's now more people at risk ever than before of a crashing stock market. So we want to be careful. What are we actually preaching and praying for? That's an incorrect chart. I didn't draw it correctly, snap it correctly. Look at how much Trump has made. Okay, he reminds me of Putin. Putin made sure he took over the government. He made sure the capitalists were going to try to pay people decently. Okay, but he also knew communism didn't work. He was very upset over that, but he gave in because he was just a communist. Maybe still at heart, but he soon learned he could make a lot of money from those capitalist people, the big leaders of those businesses, just rake it in for himself. But he also made sure he had power that he was running the country, not business. Trump wants to do the same thing. So you business people voting for Trump, you may yet learn he's going to make you pay more to everybody and pay this and pay that and do that. You won't do so well and the stock market won't do so well. And yet it may be a good thing for the country. In fact, that's the only way to make it work the next 20 years when we're due for a generational swing where we all come together and work better together and have a better time. And that may be how the only way the Trump stuff works is they've got to get a hold of those businesses and make them pay. All right. Now, at the same time, that's second best. What's first best is that really we're all just sharing because we're being forced into the Trump side. We should want to get into it. That's kind of like what the religions teach, okay? God doesn't want somebody forced into the religion, okay? You're better if you want it. Now, here's something I wished I'd started this whole little speech on, so I'll probably do this again separately or at the beginning of some other little update someday. But this is what I want you to look at. This is the profits relative to price. What this means is during inflation time, but even before it, going into it, during COVID and afterwards, businesses raised their prices and made more and more money. And they helped explode this inflation. I say it's business's fault for the inflation as high as it was in 2022. However, in second place, we should blame the Fed Reserve. The way they printed money and the way they timed it, they overdid some things and didn't try to put the brakes on soon enough. The third place is just you and I as consumers just not manage things correctly and just spending way too much money, okay? All right, now look at this. This is a big decline early this year when the stock market declined 25% or whatever it was, and businesses lost money. They didn't make as much. They're scared of investing. They're scared, and they're backing off on the jobs right now. They're scared of where all this Trump stuff's going. And it looks like to me, I believe this is a quarterly chart. It ticked up just slightly, I'm assuming, for the second quarter. That's not much of a recovery, folks. They're still not making as much profit as they made, but they're doing good, but they're also scared. Now, I'm telling you this for two reasons. One, this could be a sign bad times are coming after all, or it's just not going to be so good in 26, okay? But the second reason is pay attention to what they did of basically raking you and I over the coals and making more and more money as inflation went high. They gouged us, okay? They gouged us, and they got away with it. I'm concerned our capitalistic system has evolved to where they're always gouging us every year after year after year. And you look at some of these companies. Normally, every other year, a company would not do so well as the other years. And yet, over the course of a decade, the overall path would have been to make more money because the economy is growing, more money printed. Then we would have a recession when everybody basically loses. And then we'd start the whole process. Now we're seeing companies, they don't have that backing off every other year. They don't even have a back off at mid-decade, which should normally occur. And some of them don't even back off during the recession or very little. All right. And some have even learned how to make money in recessions. So we're wiping out all the downside for these companies. So they just make money forever and they just do it all the time. And this is why people are under pressure on their jobs. They've got to make money every week, every month for that leader of the company, basically, okay, for the company. We're being enslaved, brainwashed. This is stupid, okay. We got to watch out for that. We can be developing a very bad capitalistic pro-business type of system that by all rights deserves to be done away with and try socialism for a few decades and then go back to it and we'll probably find out it'll work again and be refreshed and be happy. But why not just tweak what we have, make some modifications and make some balancing? This is also on home prices and problems and complications there. And then this is a chart I really wanted to show you when I told you one was not right. This is the highest level of professional active money managers, what they're doing, buying and selling. Notice that they bought, stock market went up a huge amount. Notice that they've been selling, buying, but basically not going anywhere, yet the stock market went up anyways. Why? Because the rich are selling stocks to the middle class and poor, the retail trader and investor, and they're selling even more than these professionals, but these professionals overall are selling and sometimes buying back, but mostly they're just stalling out here. And so it's the middle class and poor, they're buying more. And those people are not good timers. They could be buying near the top, near a time of troubles and problems. Now, this is the rate cuts aren't created equal. Okay, so we want to read into this what's going on, who's impacting who. Now, what we also have to consider is what Goldman Sachs realized. If the Fed Reserve drops interest rates and you're not in a recession, then the stock market went up 50% over the next 2 years. That could mean we're in a Goldilocks moment here into 27, but that's when we got to start looking for the day of reckoning and 35 to 60% down and all that fun stuff, okay? And it may last a little longer than that. Now, they also learned if the Fed Reserve drops interest rates during a recession, the stock market normally drops 20 or 30%. I agree with all of that. I don't know as I agree with 50% up. That seems a little too high, but I'll allow it for now. It does fit into some of my older targets, but I'm becoming less optimistic the more I dig into all this Trump stuff and the behavior of what's going on in our country, how we're treating one another. All right, this is on marriage, that the rich are the only ones that can afford to be married, and it's so dumb to spend a lot of money on being married, okay? And God required us to be married in the very beginning, and I'm not even sure he required marriage at all, period, but he certainly required us to have babies, build a population, Today, if you look at how we naturally have miscarriages and abortion, God's basically saying he doesn't want so many people coming to this planet. We're not running things well enough to do it. And what's really going on is he's saying nobody should be pressured into being married, nobody should be pressured into heterosexual sex, and nobody should be pressured in to having children. That's all there is to it. So if you need those children to run your economy, print more money, make a better time, you go get some children for some other countries. But we're not doing that today because we're throwing out all the immigrants, okay? And we don't want to teach them and train anybody, all right? They're supposed to be magically smart and productive and ready to go to work, I guess. All right, Michael Hudson, you want to look into his research. You want to look into Steve Keen research, Keen, I believe, and it might have another E, I forget. Just recently wrote a good book. I just read the book. Both of these get into MMT economics, but they also have their own sidebars on that of different things that don't have to do with MMT. And it's very, very interesting to talk about. And Michael Hudson has some very good ideas, well, Keene even, on how it works globally in the sense that we're enslaving other countries with lots and lots of debt just to work for us, okay? Money losers are tech sector winners. You want to think about that a moment. It even takes me a little bit. What it really is telling us, this is kind of like the dot-com boom in the 1990s when most of the companies really weren't making any money, but we thought it was the way of the future. I remember giving a speech to some CEO type people and this and that, and I came back home and they were all investing in these great companies, and then they lost boatloads the next couple of years. I remember coming home saying, gosh, I just don't like this dot-com thing. And my wife was working for a dot-com company and mergers, acquisitions, and this and that. And she says, I'm telling you, they're just buying up other companies just to make themselves look good. The burn rate of money is just way too fast. This whole thing is going to crash and burn. And as soon as they went public, we sold half of our stock, and some people were mad at us for doing that. A few months later, we sold the other half and didn't get as good a price for it. We're glad we did it. The company went belly up, took down all the other 8 companies that they bought for. And meanwhile, we got the hell out. And that was for the early 2000s recession, the dot-com blowout. I think we're heading for another AI blowout someday, and maybe even a 1920s, 1930s blowout, although I doubt it's going to be that serious of a crash, or I hope it isn't. And yet, maybe that's what we need to really clean things up, rebalance, and get on to being a better people, taking care of people and business. All right, here's another one. Consumer cash pile is very high. Hopefully they're just saving more money, okay, for bad times, bad days, okay? But some of that's coming into the stock market too, all right? But we need to read about that and think of how that's going to factor in. Here's some comments from Mohammed El Arian on some of how these things are working. And then here is U.S. consumers have never been this pessimistic. Their future income, 70% of Americans think their income will not keep up with rising prices in the next 1 to 2 years. They're concerned of inflation. They're concerned the pay isn't there for them. They're concerned this system is still, under Trump, just a brand new form of trickle-down economics. I say Trump is putting a new dress, new costume, new clothing, and setting up a new stage, and it's still the same old story, the trickle-down economics. It doesn't work. I say Trump has put a shroud on us, whatever the hell you say it, that he is putting an end to the government that evolved into becoming 1776 England, King George England, and we throw them out. And that was the Patriots. So therefore, the Trumpsters, the Patriots. The problem is, if you look what he's switching to, what he's switching to is the King George 1776 England. The real patriots should throw Trump out then, okay? And the real loyalists are, of course, with Trump. So be careful what party you're with and where you're going with this. But anyways, consumer sentiment has been in a decline since 2000. I mean, they just feel like no matter who's elected, no matter what we do, the end of the world is coming. Nothing is working. This person at the Federal Reserve, Dallas Fed, thinks we need to make some adjustments of what we're using as benchmarks to make decision on interest rates. I need to study and learn more of that. This is what people are forecasting for coming years, okay, for next 5 years for these companies to make in revenue growth. It's huge. It's big. It's firing this market. My thoughts, if this is going to last 5 years and actually work, the stock market will be too high by 2027. Already have it dialed in. It'll start down, and then when the 5 years is over, everything crashes. My guess is it's going to crash sooner than that. My guess is it's not going to be this good. People are already forecasting too high. They're too optimistic, and somebody always has to do it, okay? This is the cost of putting somebody in jail, okay? And yet, look down here, this is what it would cost if we could actually use health treatments, psychology. This country needs a psychology. Ever since Clinton to date, the presidents have allowed, and the more of this conservative Republican stuff has done away with helping people psychological-wise. They don't want to spend government money on it. They don't even want your insurance company spending money on it. Bad, bad thing, okay? Read your religion. Read the true religions here. Some of this Gnostic Christian stuff, which Carl Jung, a psychologist of the unconscious, was a Gnostic Christian and believed the Gnostic Christian scriptures were the beginnings of psychology, helping yourself and helping someone else, okay? Little story here. This has to do with Charlie Kirk. He was a bad guy. That's all there is to it. I almost talked myself into saying, yeah, it's such a sad thing. And he was probably okay, just squeezing by. No, you dig deeper and deeper and further back, and he was just a bad guy. And there's going to be a lot more bad guys disappearing here soon on both sides. The country's had enough. All right, hot take. If a single billionaire can fund his own space program, then yes, we can afford free health care. Absolutely. Son of a bitch. Let's get going. Come on, folks. All right, this is the $7.7 trillion in money market funds. Even though I'm upset that the middle class and poor are pumping more money in all of a sudden in the stock market when it's this high, they probably will win into 27. They may be wrong in the next few weeks, next few months, but that's how they do it, okay? They're not great at timing along the way, but they can win. But it looks like to me they're not going to put that much money in. That really what's going on is they're building good reserves because they know hell cometh, okay? The payback, the day of reckoning cometh. But it also tells us we've also printed way too much money in everywheres, but mostly for the rich and big business and Wall Street and Banker Street. Here's the retail investors buying accelerates, okay? They're just buying way too much in the stock market here, too aggressive. We're seeing study after study showing, boy, it looks just like a 1929 crash setup. Boy, it looks just like the 1990s. Boy, it looks just like 2008, 2009, okay? And yet you dig deeper and no, it's still a different story this time around. This is some of the performance. We know that basically, this is getting a little too carried away, but basically Republicans have created all the disasters in this country. The Democrats then have to clean up the mess, put it back, and then bring back good times. Then the Republicans come in and maybe add a little more good times, but then the disaster comes in. And they never really have helped out and been productive. Now, here's what's tariffs doing, which I'm surprised. This is where I've been not keeping up this year with this bull run like this the way I thought. I was such a genius from February into April, and I've been a little bit of a dunce lately here. But you can just see it is tearing down these businesses down in the bottom here. It's been a delayed response of this tariff data, business-wise, economy-wise, and even the economy, but also the inflation. So inflation has been picking up slower than I thought, but I think we got the bottoms in. I think the trend is up. It's working. This is chart of the day, central bank easing and focus. And a lot of people are saying, okay, this is too high. This is another story, something bad coming. Others would say, but no, you're actually fixing that. But the problem is it can be a delay. It's just something else to think about that is it right or wrong. There's just a lot of this stuff that provides a mixed picture, but it looks like there's a chance we can be still optimistic here and squeeze it through another year or two. But then the day of reckoning is coming, and I hope to be there for you because I've caught the one in the early 2000s. I caught it fairly well to top in 2008, 2009. Did really well for the main thrust down, did fantastic at buying like a week or two after the bottom. The 2020 top I caught within a couple of hours, even though I had been looking for it earlier and working at it, and then caught the bottom 2 days after the bottom in 2020 and been bullish that type of pattern, that decade pattern ever since. I'm still trying to be there, but there are things telling me maybe I should just go on vacation for a year or two. And if the stock market goes up a huge amount, don't worry about it. It's coming down even a greater amount. The higher we go from here, the more we're stretching the rubber band, the lower the downside targets I'll have, the worst of time, okay? All right. That pretty much covers it, folks. This is the notes from a Napkin video update, not the newsletter that I put out for free at criticalpointpod.com. You have to go to the blog section and find it, and you can get it for free. I also put it out for free on LinkedIn under Richard Posson. And where else is it? It's on Consensus, okay, which I've been writing for them for a couple of decades now. And then that's consensus-inc.com. Okay, And so now I'm just experimenting with, instead of cramming all this news into my model analysis, the people understand what I'm doing and they're involved in the markets. They'd rather I just get right to the point. So I have a snapshot right at the beginning of every morning brief and the weekly update, to try to keep just a few minutes of just signals and what direction and what targets we have. Then I go on with the analysis and then maybe some news and other stuff. And sometimes that drags it on. So instead of a 10 or 15 minute morning brief, it's 15 or 20. Instead of a 30-minute weekly update, it could turn into well over an hour. Well, I've learned if most people allow me to just strip out all this news, this discussion, the politics, the religion, the society, the personal opinion, I can put that in something else and go as long as I want, and may even make it just free. They're fine with that because they're going to pay for those signals. And they want those signals and spend very little time talking about it because they're also studying and learning. Hopefully you're one of those, but even if you're a beginner, hopefully you can put it all together. Get on board with me. Go to criticalpointpod.com, criticalpointpod.com. Get signed up, 60-day free trial. Cancel anytime after that. My guess, after 60 days, you'll be with me for the rest of this decade, because we got a rock and roll time, good times, disasters, terrible, evil, sinful times. I'm hopeful to make money regardless of which direction it's going, but hopefully I can at least reduce the risk and get out of the way of some of those bad times. It's worked well for me in the early 2000s, late 2000s, 2020. And I was learning most of it in the 90s and 80s. I was really more into commodities, where I learned a lot of this stuff's work. And then I realized, gosh, I can take what I learned there, alter it a little bit, change it a little bit, apply it to the stock market history, the economy history, and now use that moving forward. And it really made a big difference for me in the 2000s and to date. Some of my funds are up 1,200 to 15, or my accounts, I should say, up 1,200 to 1,800%. I also have some that have slipped, and from 2020 I've been up over 200%. Some of those slipped below 200% because I was a genius, made a boatload of money on the way down into April. But April was a 1.5% probability to bottom. It should have bottomed in March, or it should have bottomed sometime May to October of this year. Okay? It bottomed in April. That is the once a lifetime kind of thing that can go against you sometimes, and that is related to Trump. That hopefully that's just once a lifetime thing we're dealing with right now under Trump. But I am looking over my shoulder. What are those others 1.5% times? Okay, and how do we deal and work with that? In the meantime, most of this modeling still chugs right along, saying, even with the interference of all this Trump and burning down the government and this and that, we're going to rebuild things. And then for the moment, people are spending money still. They're working hard, and it's helping the economy. It's helping the stock market. Okay. Again, past results are not necessarily future results. I hope you'll be on board with me here. This is going to be really something for the rest of this decade, and hopefully we're changing to something where the next 20 years is going to be a good time, because if it's not, we're going to have a lost century. And China's going to win no matter what, but if we have a lost century, China is going to win, a few countries in Europe are going to win, the rest of the world could be heading in the toilet, including us. Have a great day. Thank you.